Hi everybody, welcome to another update on the stock screener. Today we're going to take a look at another lithium company. But first, you know that I talked about Rocktech Lithium, right? I thought that this was the first lithium converter in Europe. That's what I thought. But apparently that's not the case. Actually, this company has gone down. So no, Rocktech Lithium is not the first lithium converter in Europe. Apparently, AMG is the first one. And this company is soaring. So I think I'm going to start a position in this. This looks like it's going to break out. And there are many catalysts. So these are the latest earnings. And you can take a look at it. Basically, when you look at the earnings, it's trading at a PE of 5. Okay. They have lithium production spodumene in Brazil. They are going to build the first lithium hydroxide refinery in Germany. So before Rocktech Lithium. They also have vanadium, which is actually a very interesting metal because the vanadium price is in an uptrend and it's also starting to break out. So this is used in steel, and the trend looks very good. It's up, and in Europe, ferrovanadium is also up. It looks like steel and iron are doing pretty well, and vanadium is used in that. So not only do you have exposure to lithium, you also have exposure to vanadium. So let's take a look at the earnings. So market cap is about 1.3 billion US dollars. Third quarter earnings were at almost 300 million, so that's a PE of below 5. This already is very cheap to me. This is a very big company in Europe, Brazil. So this deserves a much higher PE. So I think it could go up 50%. EBITDA is 400 million, and they said that, you can read it here, the EBITDA guidance for this year is to exceed 400 million. So this is going to go higher than 400 million for this year. So expect the PE to go lower than this, probably a PE of 4. So that's a very nice guidance. Price to EBITDA is currently 3. So this is going to improve this year and next year. Now equity is only 450 million. So price to book is a bit high, but we are looking at the earnings. Okay. Debt at 600 million. Okay. It's half of the market cap. That's doable because the earnings are at 300 million. So that can be paid off quickly in a few years. So the same as Sigma Lithium, this has a mine in Brazil. But this mine was already going in production very soon. So this was from 2016, even earlier than Sigma Lithium. And they were the lowest cost producer at that time from 2016. So you can see here Greenbushes, Pilgangoora, and here you can also see Greenbushes, Pilgangoora. It is one of the lowest cost mines in Brazil. So I expect that they are still one of the top producers in Brazil. So this is the Mibra mine. It has a 20-year mine life, and they are producing 90,000 spodumene tons. So this is much less than the Sigma Lithium. Sigma Lithium has a 270,000. So let's see here. Sigma Lithium has 270,000 spodumene, and then going to 500, 700,000. So it's smaller than Sigma Lithium. But of course, this company has more things. It's not only spodumene production. They also have the lithium converter coming online, and they have vanadium. They also have other things like graphite, silicon, antimony. So these things are also in play here. But of course, most of the EBITDA comes from lithium and a bit from vanadium. That's because lithium price has gone up a lot. So this is an integrated business, not just a spodumene mine like Sigma Lithium. Now, there are 3 catalysts on top of the PE of 5. First catalyst is the expansion of their mine, the spodumene mine in Brazil. So currently they are at 90,000 production, and this is going to 130,000. So 90,000 to 130,000, that's 50% higher. Okay. Startup is in April, just like Sigma Lithium. So we have the same timelines. So expect a 50% increase in revenue. That's of course only 50% of this part, because this is the lithium vanadium part. So this is going to increase by maybe 30%. So that's the first catalyst, the increase in spodumene production, which will decrease the PE ratio probably to 4.5, maybe even to 4. So this is coming online very soon, in a few months. And you can see the timeline here. The second catalyst is the lithium converter. So that goes online in Q3 of this year. So that's the module 1, which had a capex of 140 million, probably already paid for. And this will have a 20,000 tons capacity. It goes online at the end of the year, Q3, August commissioning. So that's also the timeline of Sigma Lithium, a bit later. So that's the second catalyst, and we already know around how much that this will give, because 20,000 tons capacity, and this is a lithium converter. So we just look at Rocktech Lithium, and then we know how much that this will bring. So this is the good thing about all my research. We can just look at other companies and compare what the value is. So we know that Rocktech Lithium also had a feasibility study for, that's this one, for the lithium converter. Yeah, I think this is the one. And this was the spodumene mine. So this is the lithium converter. 25-year project for the converter. Production is 24,000 tons. Okay, so a bit higher than the 20,000 tons of AMG. So just cut a bit off of that, 20% lower. So what is the NPV of this thing? NPV about 1 billion, 800 million at these prices, but prices are much higher right now. So let's take a look at this here. So after tax without the Georgia Lake, that's this here. After tax without Georgia Lake is about worth 2 billion NPV. So 2 billion NPV currently, that's here. But of course, this is 25-year mine life divided by 5 to get the current value. So that's about, let's say, 400 million. So you could say that AMG is about 300 to 400 million worth on that converter. Okay, based on the feasibility study of Rocktech Lithium, you could say that it's about the same. So this lithium converter, module 1, is about 300 million worth. And that's coming online in Q3. So add another 300 million worth into the market cap. So that's about 20-30% higher. So not only are we going to have an expansion on spodumene, which will give probably 30% upside, we have another 30% upside on the lithium converter that's coming online. And we have a third catalyst, vanadium. Vanadium is going to start up this year. They have started operations in November last year. And this vanadium facility is going to ramp up to full production in 3 to 4 months. So that's ongoing right now. So this part here is also going to double. This is this Ohio facility expansion, and it will double the capacity, right? And it was started in 2019, and now we are going to go in production. It's complete, and those numbers are not in our financials yet, because this is just started up in November and it's going to go to full production in 3 to 4 months. So that's another catalyst. So we have 3 catalysts. I think this can easily go up 50%. PE is already below 5. We add more capacity on the mine. We go into production with the converter, and vanadium will also add to this earnings. And here you can see where AMG is located. It's in Germany. They will build that converter here. And the good thing is that energy costs are going down. So that will benefit AMG as well. Lower energy costs, more profit, because the natural gas price in the EU is going back to where it came from 100 MCF back to 30 and maybe even lower. I mean 100 megawatt euro per megawatt hour to 30, and now it's going much lower. So that will benefit the costs for AMG in Europe. So I think there are many catalysts here. Very good company, very low costs, and very cheap. You can see here the net income is rising, most of it coming from lithium, and it will keep on rising. So the EBITDA is now already here, and it will exceed this 100 in the coming years. Very good trend. Also, when you hold this long enough, this is only module 1. So module 1 is coming online this year, but we have also module 2, 3, 4, and 5. So a lot of lithium hydroxide modules will come online. And the good thing about this is that it doesn't actually depend on the price, because even if lithium goes down, spodumene will go down as well. So this is a converter and will not depend as much on the price of lithium. Yeah, because if lithium hydroxide goes down, then the spodumene will also go down. So the costs will also go down, and you will make money on the margin between lithium hydroxide and spodumene. So I think this is a safer bet if lithium drops in price, because it also has vanadium, graphite, silicon, which are very needed in the future, because batteries are going to this here, graphite and silicon, and they also have other critical materials. Okay, so there's a backup plan. There is expansion capacity here. There is diversification to vanadium, graphite, and silicon. So this is a very safe company, great valuations. So that was the update. Take a look at it and see if it fits your investment. And I'll see you in the next video.